What's going on, everybody? Welcome in, and thanks for checking into the TDR Trade 2 Black podcast. I am your host, Shad Dales. Happy Wednesday. We are now at a stage in this space where whatever horse you're going to pick, if you choose wisely. Some stocks getting absolutely crushed right now, where others are performing really well. Who? AYR Wellness came out with a great earnings report here this morning as well. Cresco Labs. Wow, stocks performing well, and they are grabbing a lot of attention based off their latest earnings. So we're going to dive into that as well. A roundtable discussion taking place with Vice President Kamala Harris, I should say, this upcoming Friday, as the topic is going to be about cannabis. Is that momentum from last week's State of the Union address involving President Biden? Who knows? But let's welcome in our two TDR co-hosts. First up, Anthony Varell. Happy Wednesday. Good to see you. How are things?
It was good. It's good. It's nice to see two earnings reports come in this morning and the stocks react positively to fundamentals. It's a little bit different for once, but it was good to see.
Yeah, I think what you're seeing right now is not everything goes in the same direction involving all companies, because you're seeing some companies going one direction and others are going in another. But let's welcome in TDR co-host Guap. Good to see you. Happy Wednesday. How are things?
MSOS up 4.2%-ish.
Well,
it's a good day in Stockland.
That's encouraging. Okay, let's begin. Into the wire. Segment number one outlined the biggest headlines in cannabis. As I said off the top, Vice President Kamala Harris appears to be putting the band together that includes a roundtable discussion on cannabis policy that will include Kentucky Governor Andy Beshear, Director of Public Engagement Steve Benjamin, rapper Fat Joe, along with a handful of people who have received pardons from the administration's executive action on marijuana offenses. We're at this stage now where the future of cannabis depends on Fat Joe.
I wouldn't take it that far, but I mean, this is just obvious what it is. It's pandering to voters. I mean, they're referring to the initiative as the Administrative Scheduling Review Directive, which I'm assuming is Joe Biden, is the political speak for Joe Biden directing the DEA to take the HHS's recommendation seriously. This is nothing but getting people with audiences in the room and trying to round up votes and speak to voters, which, to be honest, I don't like seeing this kind of stuff, because I mean, we're in a show me part of this story, and people are still going to jail for cannabis. Cannabis companies are still operating in an illegal framework. We've still have got dispensaries getting broken into. We've got workers getting robbed. I mean, the cannabis industry still has a lot of work to do, and the government needs to actually follow through on things that they've said. We don't need Fat Joe touring the White House with a bunch of people that got out of jail for clemency. It's great. I'm happy that they got out of jail. They arguably shouldn't have been there in the first place. So, I mean, these are some of the wrongs that they've written, but it doesn't do anything for me. It doesn't move the needle anymore in any direction for anyone that's an activist or participant in the industry.
Do we get to a point where we see like TikTok videos, like the guy that goes around with his phone asking rich?
Why do you say that?
Yeah, I know.
So
TikTok.
They actually passed the bill. They passed the bill to ban TikTok today, which they had the votes for. Which I also said, funny you guys mentioned that, because we also have the votes for safe banking. So get something done that actually matters, not banning an app that the kids are using.
Gears are in motion, but we're still 1 for 5 on campaign promises. Love the research they put out, but I can't say Fat Joe is going to send MSO stocks all the way up. Yeah, but I think it's going to it's for optics until it's not, right?
Yeah,
let's put up or shut up. Come on, Fat Joe, do it for the kids.
I would be happier if, instead of Fat Joe, she got somebody like Al Harrington, who's an ex-NBA player, who's got an amazing business in the cannabis industry, who not only understands it from a social justice reform perspective, but also from an operations perspective, and understands what operators are hamstrung with them just sitting there going around in circles. There's a lot better figures that she could have gotten that have audiences that will speak to the demographic that she wants to speak to, that can also give you firsthand accounts from operating in this convoluted industry that we're in right now.
Lucifer, I hear you. Need Don to be there to grill Kamala. Want to let you guys all know, too, we actually spoke to Don after the live stream last Friday. You guys ready for this? Wednesday, April 10th, pack your bags, boys. We are heading to Washington, D.C., and we're going to be on Capitol Hill. And we hope that we get access to some of the biggest names. Some of the names that we want to go after include Matt Gaetz, as well as Elizabeth Warren, Dave Joyce, Steve Daines. These are all names in the hallways. They have told us that we can bring our cameras in, and in the hallways, they let film. So Don has told us that they actually are pretty accessible. I'm going to put on my old reporter hat and get into the scrums and start asking about safe banking, where that sits. But I think it's time, instead of just hearing, let's see what's actually going on and bring more attention. So I'm happy to share with everybody that myself, along with Anthony, Guap, and producer Mitch in the background, we are headed to Washington on Wednesday, April the 10th, and we're going to try to get as much information as possible for you, the community. So I hope you guys are pretty excited about that, because I know we are. Go ahead, Guap.
It was awesome to see friend of the show, Anthony C., get out there and with Don, and they tagged all the senators they ran into. It was amazing just in one day how many people they were able to talk to. I'm going to do my best to get some points across and not get kicked out of there.
And I think before we go, I'm happy to actually put together a live stream with our community. Just basically say, guys, like, open up the questions for a full half an hour to 45 minutes. Give me everything that you want question-wise, and we will carry those questions with us into a briefcase to Washington and get, most importantly, questions that you guys want answered. But if we're getting access to that, let's represent you, the community, and give you guys the information you want, because we're in it with you. We want answers, right?
Yeah, it'd be nice.
Yeah.
I would just like to look them in the eyes and actually talk about cannabis.
I know.
So you can see if they're actually serious or not.
Yes. Versus, hey, does my future depend on Fat Joe? All right. Headline number 2 here and Into the Wire. Let's draw our attention to Virginia as we watch closely on whether or not the state goes full rec next year in 2025. There was some legislation news regarding the bill hitting Governor Youngkin's desk. Guap, what is the latest?
Yeah, so if you've been watching the show, you know I'm following this one really close because I'm in the state of North Carolina, about an hour away from the border, where I have some land in Virginia. So I am personally very excited about this, but at the same time, I was pleased with the speed that the House and the Senate for Virginia put together and compromised the bill and put it on Youngkin's desk. That's where my optimism goes into a 50-50 coin flip. From my understanding, there was some, is it 7 days? Is it 30 days? It turns out Youngkin has until April 8th to act on the bill. He's got a few options here. He can sign it into law. He can veto it. He can allow it to become law without his signature. So that's the interesting thing. He sort of like lets the clock run out. It becomes law. Optics aren't as bad, right? Or he can return it to lawmakers with suggested amendments. From everything I've read, this guy is not a fan of recreational cannabis. I don't think he fully understands the ramifications of legalizing possession and home grow without providing that rec sales component. He's right. And from what I can tell from reading articles on this, the Democrats were hoping that they could bundle up this initiative along with a few others in exchange for horse trading on a publicly funded stadium that Youngkin wants to get to bring the Washington Capitals to Northern Virginia. So this is all, it's all coming down to Fat Joe. It's all coming down to a stadium in Virginia. So it's like, okay.
Fat Joe and the Washington Capitals
keep an eye on it and send Fat Joe to Virginia to talk some sense into Governor Youngkin, and maybe cite New York as an example of the sort of great. They're creating a gray market there. To be perfectly honest, it's buy a T-shirt, get an eighth. It's really weird. It needs to stop.
Yeah, agreed. This is the TDR Traded Black podcast. Happy Wednesday. Thanks for checking in. I'm your host, Shad Dales, along with TDR co-host Anthony Varell and TDR co-host Guap. Coming up, we're going to actually have the AYR Wellness CEO, David Goubert, along with their CFO, Brad Asher on. Speaking of earnings, there's a few companies that announced earlier this week. First, Ascend Wellness, who posted some fairly strong earnings this week, along with Village Farms. And as I said off the top, Anthony, Cresco Labs, who reported some strong numbers, and their stock performance is reflecting from those numbers this week.
Yeah, I mean they reported great top line revenue. They reported growth, margin expansion. They still have the number one market share in Illinois, Pennsylvania, and Massachusetts.
Yep.
They're cranking on all cylinders. I mean, I'm really excited to go and talk to David on Monday, or not
Yeah.
David. Talk to Charlie on Monday and get a deeper dive into what's going on, especially around their Florida operation.
Yeah.
They're set up in front of adult use, and I mean, it's nice to see. Like I said, it's nice to see the actual stocks. AYR did today. They reported great earnings. Stock reflects that. They had a great day. Cresco reported solid earnings. Stock reflects that. They had a good day. Maybe these stocks are starting to wake up and sound fundamentals are actually going to be rewarded moving forward. That being said, let's see what the actual tape sees tomorrow.
Yeah. Well, stay connected with us.
In terms of numbers.
Stay connected with us because we've had an all-star lineup so far. Matt Darren from Cureleaf on last week, Anthony Cogniglio from New Lake earlier this week, David Goubert coming up in just a moment. We have David Hart, CEO of the Cannabis. I know you guys have a lot of questions pertaining to that company and their latest earnings. Stock's been hit pretty hard recently, so we got some important questions to ask, as well as the team from Jushi joining us tomorrow. Ziad Ghanem, CEO of Terracin on Friday, and then, as you said, Charlie Backtill on Monday. Raj Grover on Tuesday. Just another day here at Trade to Black, gents. Right?
Yeah, it's been a busy week. Busy's good. It's nice to get a pulse on all the companies around the sector.
Yeah, and before Ziad joins us on Friday, we're actually going to have our head of research and analyst, Bill McNarland, join us in the first part of the Trade to Black podcast on Friday, 11 a.m., just to dive in deep to individual companies and their numbers and takeaways. So lots going on. And lots to look forward to say the least. But the company that also reported this morning was AYR Wellness, who had some strong numbers. So saying that, let's welcome in their CEO, David Goubert, along with their CFO, Brad Asher. Gentlemen, happy Wednesday. Good to see you.
Where are we?
There you are. You're centered.
There we are. We're trying to get together here.
We got to get there. We're expanding now.
Guys? Don't work like that. Well, hey, happy to be here. Thanks for having us.
Yeah, no kidding. Strong numbers to say the least, David. And I have to admit, like all companies in this space, a lot of companies have gone through trials and tribulations, and congratulations on really righting the ship and getting this turned around. So when I look, like, I'm trying to think of how long it's been timeline-wise since you've been CEO, but you have really righted this ship in a short period of time. So I don't want to say you're surprised, but was this the goal to get it turned around in this quick a time? Because it seems like all systems go for the company. And I think a lot of momentum was building into this earnings report. And I think this earnings report latest just further solidifies the current state of the company.
Well, hey, really, thanks for that. It's been a year. So I joined the company in November, and I've moved to the CEO position in February. So let's call it a year. There's some great stuff that the team has done last year, and as we work through that, there's also things I think that haven't paid off yet and are taking longer than we expected. So on one hand, I feel there's some really good stuff, especially on getting the company on the right direction and from an efficiency standpoint, structure, how we're working. But I also think that there's things that the team has worked on and foundation that we worked on that haven't paid off yet, and that we'll see in the coming quarters. So happy with where we are, but at the same time, expecting more.
That's great. Anthony, fire away.
Guys. Yeah, congrats on the report. Listen to the call. Was a bunch of really good knowledge. Congrats on the numbers. So, I mean, 10% year-over-year growth. I know that you attributed it to Florida and New Jersey. Not a lot of, but a couple MSOs were actually reporting weakness in New Jersey. Let's drill into New Jersey first. I mean, that the attribution to growth, was that retail? Was it wholesale? Like, what was driving that in the New Jersey market? And do you expect to see continued growth from that market in 2024?
So when you look at it from a year-on-year standpoint, meaning 22 to 23, we entered the New Jersey market mid-22. So if you look at the full year 23, there's obviously an impact of having a half year versus a full year that's impacting the performance of New Jersey if you look at the whole year 23. Now, if we look more recent and looking quarter over quarter, Q3 to Q4, actually New Jersey was a good guy for us in 24 in the sense that retail was down slightly, but less than I would say others, or less that could be expected with the number of dispensaries that have opened in the state. and wholesale did more than offset the contraction, if you want, slight contraction on retail. So when you took the two together, actually New Jersey was up for us in Q4 versus Q3. And we expect the wholesale to continue to drive revenue in New Jersey in 24 as there's more dispensary open in the state. So the game in New Jersey is going to be on one side on retail to play defense in a way and making sure that we maintain that market share. And good numbers in Q4, better than we expected in terms of maintaining that market share.
Yeah.
And especially with Eatontown, one of the 3 stores that we had expanded in July that actually had better numbers in Q4 than Q3. So keep on gaining with that expansion. And then double the numbers in wholesale from Q3 to Q4 in New Jersey.
Yeah.
So we're happy to see that. That helped having a pretty solid, I'd say, performance in Q4 in that state. Actually, every state that's outside of Florida, and we'll come back to the cultivation impact that we had in Q4. But overall, a good guy, and looking at that growth of wholesale in New Jersey in 2024.
And then I know we saw adjusted EBITDA margins expand from 18 to 25%, and you guys had guided to maintain those margins in 24. Is there a top range number that you're shooting for to get that to kind of grow into, or should we expect to see 25% adjusted EBITDA margins for probably the remainder of 2024 and going forward?
I think in this environment, 25% is where we feel comfortable. I think if you see macro, tailwinds, there's definitely upside. And then also as adult use converts in our states, I think there's opportunity for expansion there too. But sort of from a same store or same store sale perspective, 25% is kind of what we're guiding to right now.
And what I would add to that is when we talk about the work done by the team in 23, I would say getting to that level of efficiency, and to your point, going from 18% EBITDA in 22 to 25% EBITDA repeatedly quarter after quarter in 23, that's really something that, I'm thankful and proud that the team was able to achieve that. So there's been some tough stuff done to get there, meaning there's right sizing in some places that was needed. But there's also great improvements from a margin standpoint, not only on internalization, but also on third-party products. So when you put all that together, that gets us to a good number. I think to Brad's point, that's pretty much how we're guided to 24, because there may be impact, positive impact, negative impact. And then I'm sure we'll talk more about that, but as we go into 25, 26, and the catalyst that we have to support, I think, significant growth in those years, then we will get to a place where we can actually leverage better those volumes to get to a higher EBITDA percentage.
And then I guess diving more to the numbers, I know you reported 29% uptick in transactions across the board. Like what drove that? Was that I'm going to go into the brand portfolio down the road, but was it brand power? Was it acquisitions? Was it growing retail? Like what attributed to that? Because that's a pretty impressive number to be growing transactions year over year.
No, true. So part of it again is that we're comparing 23 and 22, and take New Jersey, we're only half the year in 22. So part of that growth in transactions is also that it's not a like for like. But even if we look at like for like, even in like for like, the growth was actually pretty significant in transactions in the year in Florida and in the other states as well. I think it's a combination of better marketing strategy in terms of targeting better in customer acquisition and putting a focus of the teams on customer retention, meaning that getting the store teams to be able to talk about who are the customers that you saw last week and making sure that if a customer doesn't come back within 30 days, that we have specific communication that goes to that customer specifically. So getting more tuned on the communication to customers on the retention side and putting more actions in customer acquisition at the same time.
Yeah.
I will talk about the brands. I don't think the brands, and to your point, I don't think the brands have impacted yet, because while all the work on the brands, and by the way, I'm representing today. So that's the new color of Kind. That's the Kind brand that is truly relaunching now. But I would say that the impact of the two key brands, Haze and Kind, that's more of a Q2 Q3 impact of this year.
Okay.
Because all the work was done behind the scene in 23 in building the brand's architecture and making sure that we have those two brands across the categories. But customer facing, both retail and wholesale, will actually happen more in Q2 with 420 as a big focus and further during the year.
Okay.
I'll have to make sure when I see you next month in at Benzenga that we swap hoodies. Those are pretty sharp. So I'll sign mine, you sign yours, like we're two football players at the end, like we're swapping jerseys. But
we'll do that.
I'll support you. You
make
support
sure that
me.
you wear it afterwards in your podcast. Okay.
There you go. Wanted to actually bring up
Especially when you have Charles or John or others from the other MSOs on.
And I'm wearing exactly.
Oh, I have a water bottle on my desk that's from one of the other companies, and I usually cover the logo when we have other companies on, just so they're not like, oh, what are you doing, like cross promoting? I'm like, I'm smart.
Yeah.
I really think
everybody gets along well in this industry.
It's moving like that, but I think we're all we're friends, not enemies in this industry, and the game is to increase the size. I mean, increase the overall pie. Of course, happy to gain market share versus others. But the big game is not that. This industry needs to double, triple, quadruple, and it takes everyone working together. So now,
well, we talk a lot here about near-term catalyst moments within this industry. We have possibly a ballot initiative, going on in the state of Florida within the next 30 days. We talk about Ohio coming to market, Pennsylvania, Massachusetts continues to grow. What I actually was reading your press release, 15 of your 91 dispensaries operate in adult use markets, and you're positioning your assets within Florida. When you factor in writing this ship and being positioned in a lot of these growth states, you can see the encouragement and the excitement that's building for players that are doing it the right way within this space. But you don't want to get fixated, like I said, on just the here and the now. But as you said, and you've indicated, start looking at things through 25, 26, 27. Like, what's the message that you're communicating when you're speaking to your investor base based off of these numbers and thinking more long-term that can maybe help guide, as much as this is not investment advice, but guide kind of our audience to say, let's be patient, all is well.
Yeah, I think we're in a 3-step process when it comes to AYR. Frankly, 23 was what we talked about in terms of working on the foundation, getting the company to be more efficient, better structured, taking decisions with the right information the right way. And that was really all about it. And the best results of that is really that growth of EBITDA to get to 25%.
Yeah.
Step 2, 2024, is starting to see the results of the actions taken, like, for example, the brands relaunch, the work on digital, the work on loyalty, the work on other things like that will, and by the way, in 23, the other super important thing was moving the debt maturity from 24 to 26. That gives us the runway for the step 3, I would say. And then so step 2 in 24 is very much about continuing the efforts on optimization, continuing the foundation work, but starting to see the results coming from the work that's been done. So which should generate growth of top line and bottom line. But then really that step 3 is preparing for 25 and 26. To your point, only 15 stores are in adult market out of 91 stores today. 80% of our stores are medical right now. And when you look at Ohio, that already voted on becoming adult use, and we expect that to be in Q4. That's huge. Florida should follow. Pennsylvania should follow. That means that for 25 and 26, we're super excited. We're looking at our current footprint, our current volume, and thinking there's huge opportunities in 25 and 26.
Maybe that's a better stat, that 76 of those stores are in those 3 states with those near-term catalysts. That's the most important part of that.
Yeah. David also mentioned. Go ahead, Anthony.
I know you guided for about a $20 million CapEx spend. I think it was on the call for 2024. With those adult use with those markets flipping to adult use and your current presence in there, where do you see that CapEx being spent? Like, is there need for canopy expansion in Florida, even though I know you have 750,000 square feet, I think, in the facility right now? Is it retail in Ohio, or are you kind of taking a wait and see approach as how those markets activate?
So let's take them one by one. Ohio, as it's the soonest to come come live. We have already the cultivation. We have a 58,000 square feet facility. It's all ramped. I mean, it's all in place, not ramped up yet. We're in the process of adding the rooms, right? It's all paid for. We did 6,000 pounds in 23, but we have the opportunity to do 40,000 pounds in that facility, and we are in the process of growing that. So there's no capex on the cultivation side or process side in Ohio. And the capex we're having for 24, they're to get us to get to what we think will be the rule, which is 8 stores when it turns adult. So some of the capex of the 20 million will be very focused on that. And I'd say that's probably number one priority of the team in terms of growth. It's preparing for Ohio this year. So that's Ohio. Limited capex, 5 stores, that's it. Florida, yes, we have our cultivation in that is pretty large, but including outdoor meaning shade house in there. We know that we have enough to support in medical market and go into the 70 stores that we're planning, but that's not going to be enough in terms of cultivation when it turns adult. So part of the goal this year is to really close on a facility to do indoor in Florida. We're probably the only one of the top 10 that doesn't have indoor today in Florida, and that's something we want to close that gap this year. We're looking at it more as a lease and not as a capex impact for us. So that's the plan. Hope to close something in the coming months and be ready for mid-25, I'd say, in terms of having that capacity ready. So we feel good about Florida from that standpoint, and that should not have a capex impact.
Yeah.
And then,
is there a certain number of dispensaries, or is there a certain number of dispensaries that you want to get to in Florida ahead of adult use? I mean, your footprint right now is pretty impressive.
Yeah,
with 64, correct?
Yeah, we're at 64. We're saying we're going to be around 70 at the end of 24, but that's more looking at opportunistic locations where we're like, hey, we cannot pass. We need to take that location. So that's how we're looking at it for 24. Brian and I talking about it are saying, hey, we have a 10% market share in terms of locations today. We think 10% market share is actually a good number. So if we consider that in an adult use, the state may be at 1,000 locations. That means that we should get to 100 or around that. So but it's not now. It's by 26. Let's call it right. Yeah. We want to be around that number. So I'd say that would be a soft target, if you want, for us in terms of number of locations by then. And Pennsylvania, I mean, the 9 stores we have are ready for adult. Like they're pretty large, good parking, good space around. So the stores are good from that standpoint. And on cultivation, we have 2 sites. And so we're working on some smaller capex in terms of improving the kitchen and processing and stuff like that. Yeah. But we feel we're in a pretty good place. We will see if there's need for more cultivation in the state. So we'll be looking overall at the cultivation of everyone and looking at where we should be, but we don't anticipate that to be a large capex either. So long answer, but overall, pretty ready.
Brad, how long have you been with the company for?
5 years.
5 years. You've seen a lot of change, to say the least.
May of 19.
Yeah, and I'm sure that debt maturity extension probably made your life a little bit easier, did it not?
I'm sleeping much better now.
Well, hey, to be honest, Brad is the one that did so much of the work to make that happen, and he probably didn't sleep for 3 months straight.
I'm sure.
To get that to the finish line, so I'm sure he's sleeping better now.
Catching up to do.
So that announcement was made back on November 1st, which that, like I said, the debt maturity extended for 2 years, $400 million in debt. So, we know these next 2 years are going to be important. I think what people want to see as this industry matures, and as we talk about these earnings reports and the direction of the company, like, are you anticipating, as a CFO, looking at numbers, that these next 2 years could be the 2 biggest years for the company?
Yeah, absolutely. I mean, right now we're doing everything we can to try to optimize the company and do what we can control. But the catalyst on the horizon, whether it's rescheduling or those 3 states, will completely transform the cash profile of the company.
For sure.
So we're expecting massive changes from the exposure to those states.
Yeah.
I mean, speaking about optimization, the thing that I was surprised most was on the earnings call was the drilling down from 12 brands into the 2 core brands with Kind and Hayes. I mean, with your background at Neiman and LVMH, David, I'm assuming that's one of your brainchilds or one of your first, I guess, initiatives
Yeah.
as CEO. Can you kind of walk us through why that or how that happened, and
Yeah.
I guess the rhyme and reason behind it
Uh-huh.
to drill down into those two core brands?
Totally. So coming in, to your point, it's funny. The board that's behind us is
Yeah.
probably hasn't touched that in almost a year, but that was what we discussed a year ago, saying, hey, we need to move from 12 brands to 2 or 3 brands in a good, better, best way of looking at it and across categories. So the key thing was probably 2 things. The first one is the way it was talked about before was, hey, every time there's a new category or a new category, there's a new brand for that category because that corresponds to that specific product. And we shifted that, and that's why there were so many brands, plus the acquisition of different companies, but there are so many brands that were created. We shifted that to say, no, you actually want to have brands that speak to customers across product categories, because the same patient, the same customer is going to be using gummies and edibles at some point, but will be vaping at another moment, will be using flower at another moment, and maybe also a dabber or concentrate customer. And asking around, we realized that, yes, the cannabis customer or patient is actually using different product categories.
Yeah.
And when I was working at Louis Vuitton and launching shoes years ago, where it was only a handbag company, we would not have thought of saying, oh, we're going to use a different name for the shoes.
Yeah.
You want to use actually the brand equity that you have on your core products to actually help in developing the other categories. So the 2 key principles were, it needs to be a brand that speaks across all product categories.
Yep.
And then it needs to be a good, better, best way of looking at it. And then the last thing I would say is, from a marketing investment, if you invest in 12 brands, considering we can't invest that much from a marketing standpoint in this space, then you're going to dilute so much your investments. Whereas if you invest only in 2 brands, you can actually put real power behind your brands,
100%.
both for your retail, but also for the support in wholesale, which is back to my first point, something that we haven't done yet, because we need those brands to launch now to be able to put the power behind them.
It's proper way of branding, right?
Yeah. That's
don't know a little bit about a lot, know a lot about 1 or 2 things and do it really, really well. And that's what helps build a brand, which is badly needed in this space. What actually viewer actually reached out. They wanted to ask Jonathan Sandelman, former CEO, just somebody wanted to ask what his role is with the company day to day. Does he have much of anything anymore? Like, I know he's chairman, but I'm sure he's providing some direction, advice of some sort.
Yeah, so John is the founder of the company, has been in the space for 5 or 6 years now, has a great knowledge in the industry, and comes from a financial background where he has so much skill set and knowledge. So where John is focused very much is supporting from an overall long-term strategy of the company, supporting also on how we're looking at investments, new states, things like that. And at the same time, as chairman of the company, his role is to make sure that the long-term financial health of the company is in a good place. So he has a key role to play in that sense in the future of the company and the path that we're taking.
Yeah.
I had one more question as it relates to Florida. Florida, your flower sales are up about, I think, 50% year over year in ounces of flower. What's driving that? And are you seeing a shift in consumers from value to mid-tier to the tier 1 brands? Or like, where is that consumer in Florida living right now as it relates to AYR's business?
Mm-hmm. So we think we're already constrained we're still constrained from a production standpoint in flower. And when you look at our market share in oil products versus flower in Florida, we're in a very different place. I mean, we're every week 13, 14% market share in oil, and we're at right now about 6% market share in flower only. And when we had the issue in Q4, we actually went down to 4.5, something like that. And the best we've been is probably 7 something or 8 on the on flower. So we still have ground to cover to actually get to a higher market share in Florida on flower.
Interesting.
Now, because of, I'd say, and we've been for a long time a player that was playing really, to your point, on value on flower. And I would say it was also linked to the quality of products that we had maybe a year ago in our flower being a greenhouse and not being already fully of the right quality. With the more recent movements that we've had in Florida, meaning that was a chance for us also to play differently from a price standpoint and moving from, we're not moving away completely from value, but moving to pricing of flower that's actually, we think, a better place, I would say, in Florida. So we set up a tier structure. I would say almost unfortunately, it's still based on THC. We'd rather have it based on terpenes and other things, but it is for what it is for now. So we have set up a 4-tier pricing depending on THC, and what we see is actually very little resistance on the tier 1, which is the highest tier on that pricing. So, and just to finish on that, we still don't have true indoor quality flower. So we think that there's another tier that we're not playing in for the moment that would be above that tier 1. So, but we've increased quite significantly our average price over the past 3-4 months on flower.
And has Kiva rolled out in Florida yet? Kiva is live.
So Kiva is live. Started rolling, I'd say slowly. Good answer from customer. Good response from customers on Kiva. To give you an idea of numbers, we are only, I would say, only 3% of our business today is in edibles and mainly Kiva. And the market in Florida is about 10% mix on gummies, meaning on edibles. And we think that now that we have Kiva, we're actually launching in a few days this brand gummies with, I think, 12 different flavors. And so with the focus on Kiva, focus on the gummies, the cookies that we have and so on, we think that we can reach easily that 10% mix of our business in the coming months. And we actually shoot for higher than that because we have Kiva, which is a pretty unique positioning in Florida.
Yeah, Kiva's a great high. I consider it a high-end brand. Great products. They've had staying power for, it's got to be 8 to 10 years now. They've been around. I mean, great. I was excited to see you guys bring Kiva.
And from a price point,
Florida.
It's easily 50% higher price, I would say, than regular gummies in Florida, or than our canned gummies, which are great quality. But Kiva is bringing a higher price point, which is awesome.
Yeah. I think this podcast has demonstrated, Brad, as to what kind of CEO you have in place now. Knows his stuff and definitely is executing everything. But, you know, with you being around 5 years, what would you say is the biggest difference with David being associated with the company now?
The biggest difference is from David, him bringing to the company?
Yeah.
No, I mean, I think we spent a lot of time talking about it. I think the brand rationalization, is coming in to identify that so quickly. And, you know, it's music to my ears from the CFO's standpoint, the synergies in marketing, it's just your dollar goes a lot farther. So, you know, that's been huge, but I think he's also just from a number standpoint, he's not purely marketing and brands. He gets all the numbers really quickly. And so it's a pleasure working with him. And, you know, it's been going great so far.
Well, if you're looking for a job after you leave AYR, come join our team. We're interested in talking more, but this has been great. And congrats based on the latest numbers. But I think more importantly for the overall industry, we like to hear stories like this and guide people in the right direction. But look forward to seeing you guys next month in Florida. In the meantime, I know you guys will be busy, but let's keep in touch.
Sounds good. Appreciate it. Thank you for having me.
Thank you, gentlemen.
Congrats
on the quarter.
Wow. That was, I love the conversation that you had back and forth with him. You know this stuff better than anyone when it comes to product, but when it comes to brands, execution, and just breaking everything down, and then him outlining that, look, they want a bigger Florida share, a market share. That's encouraging and interesting. But for him to go down from 12 brands to 2, that's a bold move. But when you look back at it and kind of see the vision as to what he's created now, it makes sense.
Yeah, I mean, you can't. The one thing that cannabis hasn't gotten right yet is the branding. And having a portfolio of brands, it might sound good, but David's correct in that assumption. I mean, imagine trying to allocate marketing dollars to 12 different brands and your dollar needs to go as far as possible. By dwindling it down to 2, I can then go market 2 brands with product portfolios under it, but the same brand message, the same brand equity, and that advertisement is just, it's laser focused.
Yeah. Guap,
I'm going to bet that strategy is going to pay off for them in the long term.
Guap, what'd you think of that?
I thought that was a great interview. I'd love to have him back. Seems like a really good-natured dude and very
down to earth,
transparent. Yeah, I was happy to hear the marketing angle echoed at the end there by the CFO, because that's exactly what I was going to come on and say, is that, as a guy with a marketing consultancy myself, and when you look at the portfolio brands that some of these MSOs have, I've heard of half of them, right? But
Yeah.
you like I said I think the second appearance I came on, there's a dizzying array of products at a lot of these dispensaries, and you can overwhelm first timers, you can overwhelm seasoned veterans of the cannabis industry like me. You walk in there and you don't know where to start. So yes, the cost synergies, but I'm coming at it more from what's going to cause the first timer to make a quick self-guided decision. It's nice to have a value, good, better, best is what he said, but a value and premium options, and then options within those two brands. That's
Well,
that's music to my ears too.
I think when you look at this company, you have somebody who's got, how many years was it, Neiman Marcus? Over 20 years, but this, understands marketing, understands branding. You factor in what Brad said as CFO being there for 5 years, and as well, Chairman Jonathan Sandelman, former president of Bank of America. You can understand from the business, finance, number side to a pure execution, marketing, branding side that they've righted this ship, and why a lot of people within this space are interested in the AYR Wellness story again. Don't forget, folks, coming up tomorrow on Thursday, we have both Jushi and the Cannabis coming up. I know there's some important questions that we're going to have related to the Cannabis as to what's been going on recently, as well as Jushi. Those are two good companies that we've been following closely, that people have been following closely, I should say, especially since the HHS announcements. We're going to have a back-to-back with that to talk about their latest earnings, as well as Friday we have Terracin on, and our lead analyst, head of research, Bill McNarland, to talk more and more about some of the reports that happened this week. As usual, please smash that like button. More likes that we have, the more comments that we have, the more this has a chance of going viral. So let's continue to have that message. We really, really much appreciate it. I hope you all like what I basically unveiled to you guys today, Wednesday, April 10th. We are headed to Washington, so start firing some of those questions away. We're going to have pretty much a full month to prepare for that. So that's going to be exciting for our community and for the industry. Hopefully we get access to some of the biggest congressmen and congresswomen while we're there. And last but not least, please subscribe to our daily newsletter, Baked In, where we have all kinds of research reports, information pertaining to the space by our head of research, and feedback from people like Bloomberg have indicated to us that the research reports that we have constructed are the best in the industry. So that's encouraging and simplified for you, the everyday investor, to understand. That's what's even more important, because we're giving back to you. So make sure to log on. Mitch provided the link below, basically our daily newsletter, the Baked In newsletter. We very much appreciate it. Gents, enjoy the rest of your afternoon, and we'll check back in with you in 24 hours with Jushi and the Cannabis. Take care.
See you tomorrow.
Throw your hands in the air.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel, because we